It's January 26, 2026. Welcome back to the deep dive. If you've been waiting for the signal, I think we can finally say it.
We can.
The regulatory fog has officially lifted.
It's gone. And this isn't just a good week for price action. We're looking at the actual, the structural foundation of the whole digital asset economy hardening into place.
Okay, so we have to start with the headline. January 22nd, the U.S. Senate finally passed the Clarity Act.
Yep, the Digital Asset Market Clarity Act.
And for everyone listening, this thing does two massive things, right?
Two huge things. First, it gives us a statutory definition of a digital commodity.
Finally.
And second, it creates a federal path, a clear lane for stablecoin issuers. This is the regulatory win the industry has been waiting years for.
Because it just kills that security versus commodity debate that's plagued everything.
It kills it. But the real story here isn't just the legal text. It's what it does for, say, a corporate balance sheet. A treasurer at a Fortune 500 company can now hold these assets without fearing a lawsuit.
And that has to be what explains the market reaction. I mean, Bitcoin didn't just drift up. It ripped from 89,000 to reclaim 95,400.
Oh, that's institutional capital. They're front-running the new rules.
Yeah.
But here's the nuance that I think people are missing.
Okay.
The U.S. fixed the rules. Asia, however, is winning on the product.
Ah, you're talking about the yield gap.
Exactly. While the U.S. Senate was voting, Hong Kong approved the first batch of staking Ethereum ETFs.
Right, and U.S. ETFs, they still strip out the staking rewards. They take out the passive income part.
Hong Kong kept the yield in. So if you want capital appreciation, you buy in New York. If you want yield, you buy in Hong Kong.
And then there's Japan. MUFG, their biggest bank, just launched Progmat Coin.
Yeah, a platform for bank-issued stablecoins. They aren't waiting for startups to build the liquidity layer. The banks are doing it themselves.
Which leads perfectly into the tech convergence we saw this week. Because now that the regulators and banks are feeling safe, the tech giants are taking the gloves off.
They really are.
We've been hearing about AI plus blockchain forever, but Microsoft just shipped it.
They did. They updated Azure to include autonomous AI agents that can actually execute on-chain transactions.
Let's just clarify that for you listening. We're not talking about a chatbot giving you advice. We mean software agents with their own crypto wallets.
That can pay for services without a human pressing a button. It's the machine-to-machine economy finally going live.
And it's not just Microsoft. JPMorgan's Onyx division just tested a cross-border settlement on an Avalanche subnet.
That subnet detail is so critical, they aren't building a private walled garden anymore.
Right, they're using a private lane on a public highway. They get the security of the public chain, but the privacy they need.
It proves they're comfortable with the public infrastructure. And you know what? The infrastructure is ready. Look at Ethereum. Despite this rally, Layer 1 fees are at 2-year lows.
Which seems impossible. Usually price goes up, gas fees spike.
Not anymore. This is the payoff from the Petra upgrade and the big shift to Layer 3s. Most retail traffic has just moved off the main highway.
Leaving it clear for high-value settlement.
It's finally scaling.
And speaking of scale, we have to mention Tether, their latest audit, $115 billion in assets.
And they've pivoted heavily into short-term U.S. treasuries. A stablecoin issuer is now one of the biggest buyers of U.S. government debt. It's a strange world.
It is a strange world, but not without risks. We got a major security alert this week, the quantum leap vulnerability.
Yeah, this one is scary.
So if you're listening and you have a hardware wallet you bought before 2022, you really need to pay attention.
The old key generation standards are being cracked by new computing methods. The industry is calling for an immediate migration to post-quantum standards. Seriously, if you haven't updated your hardware in 4 years, you're basically leaving the front door unlocked.
Do that today. Okay, before we go, one last pivot. WorldCoin is dead.
The name is dead. The project is now just World.
Clean. Minimalist.
But the strategy shift is what's important. They launched the Orb 2.0, and they're moving away from being a crypto project and more towards being a deepfake verification layer.
Which ties right back to Microsoft. If AI agents can spend money, how do you know if you're dealing with a human or a bot?
Exactly. So World is betting that in 2026, proving you're not an AI is way more valuable than the coin itself.
So we've left the era of regulation by enforcement.
And entered statutory certainty. The rails are live, the AI agents are funded, now we just have to survive the speed.
That's the takeaway. The laws are passed, the bots have wallets, and the banks are on the blockchain. So as we head deeper into 2026, ask yourself this. If bots become legitimate economic actors, will your proof of humanity become the most expensive asset you own? Thanks for listening to The Deep Dive.